Which dependents qualify for child tax credit versus credit for other dependents? Imagine saving money on your taxes just by understanding who counts as a dependent. That's what we're here to figure out today. Knowing the difference can really boost your tax planning. First, let's talk about the child tax credit. This is for children under the age of 17 at the end of the year. They must be related to you by birth, adoption, foster care, or family ties like a sibling or stepchild. The child needs to have lived with you for more than half the year, with some exceptions for temporary absences. They cannot have earned more than half of their own support during the year. Also, they must be a U.S. citizen, U.S. national, or U.S. resident alien and have a valid Social Security number. If you are married filing jointly, at least one spouse must have a Social Security number too. Income limits apply too. For example, if your modified adjusted gross income is over $100,000, the full credit might be reduced or phased out. Now, let's look at the credit for other dependents. This applies to dependents who don't qualify for the child tax credit, like older children, elderly parents, or relatives who live with you and depend on your support. These dependents can be age 17 or older. They don't need to have a Social Security number but must have an individual taxpayer identification number or Social Security number. The credit amount is smaller, usually up to $500 per person. Income limits are similar but generally don't reduce the credit as much as the child tax credit. For Asian American families, this distinction is important because family setups often include multi-generational households. Elderly parents or adult children living at home and relying on your support might not meet the age or relationship rules for the child tax credit but could qualify for the credit for other dependents. To make sure you get the most out of your tax benefits, check that all children under 17 have Social Security numbers. For other relatives, see if they qualify for the smaller credit. Keep records of residency, support, and relationships to back up your claims. Remember, your income level can affect eligibility for both credits. If you are part of a mixed status family, having at least one spouse with a Social Security number can help you qualify. In summary, the child tax credit is for children under 17 who meet certain rules, while the credit for other dependents covers older family members or relatives who depend on you but don't meet the age or relationship criteria, both requiring that you claim the dependent on your tax return and can help reduce your tax bill. Knowing these rules helps Asian American families make the most of their tax benefits and plan better for the future.